Let's now revise the chapter of accounts of companies. Now, this is chapter number 9 of Companies Act and contains section 128 to 138. Right. What is it all about? The first thing, company has to maintain books of accounts and books and papers. Now, this the first chart that you're seeing is nothing but an intro chart. This is not any section chart. Okay. So company has to maintain books of accounts, books and papers for whole year. The question is, what do you mean by books of accounts? If I talk about books of accounts, it means your details with respect to expenditure and income, your details with respect to assets and liabilities, your details with respect to sale, purchase, and cash records. So that is books of accounts. Now, books and papers ideally includes books of accounts plus deeds, voucher, the supporting documents. So they have to be maintained for the whole year. And at year end, you prepare financial statements. The question is, what do you mean by financial statements? Balance sheet, P&L, cash flow statement, statement of changes in equity, and explanatory notes. Cash flow statement is not required to be made by one person company, small company, dormant company, and a startup private company. Right? So every company, whether private, whether public, whether small, whether big, every company has to maintain books of accounts. Books of accounts and books and papers for whole year. And financial statements at year end, which is first approved by the board, signed by the board, then given to auditor for audit, then audit report is obtained, it is circulated at an annual general meeting, it is laid before the members, and it is adopted by passing ordinary resolution as it is a matter of ordinary business. After it is adopted, it is filed with ROC. The books of accounts may be reopened according to section number 130. Okay. So this was the general view of the whole chapter. Now, if we go section by section, section number 128, that is the first section that we read in this chapter. Every company has to prepare books of accounts, we read earlier. For every financial year, they have to be prepared on accrual basis, as in when they accrue it on double entry system by complying with accounting standards, which must give true and fair view. Now, these accounts may be prepared physically or even electronically. But if it is prepared electronically, we must follow the rules prescribed. Like it should be accessible in India, retained in original format, it should be unaltered, there should be proper storage and retrieval things, right? The details of service provider, and this is now 23. Audit trail feature is also mandatory. See, if you're using an accounting software like maybe Tally, SAP, ERB, whatever accounting software, QuickBooks you're using, you must ensure that it has an audit trail post 1st April 2023. Okay, so you have to ensure that. Fine, ma'am. Now the books have to be preserved for 8 years. There is penalty for contravention. Supposedly investigation is going on, then it will be preserved for even longer tenure till investigation. Where do you maintain these books of accounts? The books of accounts will be kept at the registered office of the company. If it relates to some branch, then it can be maintained at the branch, and then the periodical returns will be sent to the head office. If it is a foreign branch, then quarterly returns will be sent. Supposedly, the board of directors don't want to maintain books of accounts at the registered office. It is completely the discretion of board. You don't have to confuse between register of members and the books of accounts. Register of members may be kept at a place where 1/10 of the board members reside, etc., etc. Right, here we're talking about books of accounts, and books of accounts may be kept at any place which the board may decide. So it will be shifted there, but within 7 days in AOC form, AOC 5, you have to notify this to ROC. Your books of accounts, which are kept maybe at a registered office or some other place, and the summarized returns of the branch or other financial information from outside India, this is all open to inspection by the director or his agent during business hours. And it is the duty of all the employees to give proper assistance. Then we come to next section, that is financial statements. I already told you what are financial statements. So company has to prepare financial statements which shall give true and fair view. There is a Schedule 3 which prescribes the format, but this format is not applicable to banking company, insurance, and electricity company, as they have their different format of reporting. Okay, so you have to comply with the AS, and you don't have to, you have to comply with all the accounting standards. In case there is any deviation, it must be disclosed. Why there is deviation, that also must be disclosed, and what is the effect of this deviation, that also must be disclosed. Apart from this financial statements, if the company has subsidiary or associate, then it will also prepare consolidated financial statements in the same form and manner. But if it is an intermediate holding, that means ultimately there is another holding which is actually consolidating and preparing CFS, then you can skip it. Okay, then that is then CFS is not required. Now financial statements, CFS, and a statement of subsidiary, you can say, that all is going to be the set of financial statements and laid at annual general meeting. Your financials, your CFS, before it is handed over to the auditor, it is first approved by the board. Now, how will the board approve it? It is signed on behalf of the board. If the chairman is authorized, then the chairperson signs it. If he is not authorized, then two directors, one of whom shall be MD, and CEO, CFO, and CS if appointed. Okay, in case of one person company, it is just signed by one director and handed over to the auditor for audit. Okay, now once the audit report is prepared, it is the right of every member, debenture trustee, and every person who is entitled to the notice of general meeting to receive the set. What set, ma'am? Financial statements, consolidated, audit report, board report, and extras, everything. Okay. So it has to be sent. When it has to be sent, at least 21 days before AGM, along with the notice of AGM, it is usually sent. But if you obtain the consent of these people, then it can be sent at a lesser period also. In case of listed company, it's not important or mandatory to send the whole set. You can circulate it as above, or you can keep this available for inspection before 21 days and send a brief statement containing salient features of the same, unless some member asks for the full statement. Okay. And if you're a listed company, undoubtedly your shares will be in electronic mode only, so you have to send it electronically. And if there's a public company with this net worth and the shares maybe they are not in demand, then you can obtain the consent and send it electronic mode. Otherwise, you have to send it physically. Fine. Okay. Now, reopening of the accounts. Supposedly, the accounts that were made and they were finalized, they were fraudulent, or the affairs were being mismanaged, basically fraud. It is the case of fraud. Central government, SEBI, income tax, any other statutory body or any person concerned identifies that fraud, makes an application to the tribunal. NCLT sends the notice to all these authorities to seek their observation, to seek their representation, and order the company to reopen their books, but not earlier than 8 years. So 8 previous years, the books may be reopened and the accounts shall be revised or recasted, and that recasted account shall be final. There is another section, section 129A, which is made for ideally unlisted companies, which has given power to central government, that central government can ask the unlisted companies that you prepare financial results on some periodical basis, maybe quarterly, half yearly, and they have to give reports that way. Okay. We have another section 131, which talks about voluntary revision. So here the directors ideally pass the board resolution, and they apply to NCLT. Why do they apply to NCLT? Because the accounts that they have prepared, the financial statements that they have drawn, they do not comply with section 129, or the board's report that they have made does not comply with section number 134. So for past 3 years, they can make an application. Again, NCLT will give notice to income tax authorities and CG to seek their representation and then pass the order for revision. It is like filing revised return, but you are given just one option to revise. So once a financial year, that's the maximum that can be done, but only on these two grounds. Now, what do you mean by board's report? We have a section 134, which talks about board's report, and there is a huge list. Obviously, I am not going to read the whole list over here. You can read it. There is a lot of content. It is ultimately the responsibility of the board, which the board is addressing to the shareholders, and has to speak about all these matters. For OPC and small company, we don't have such elaborate board's report. We have an abridged form. So there are lesser contents which are needed in the abridged report or in the board's report of OPC and small company. Okay, I think that's clear. Right. Now, after that, we have a section 135, which is the 134 we have discussed. 135 is corporate social responsibility, CSR. Now, what do you mean by CSR? And which companies are required to go for CSR? So every company which has net worth of more than 500 crores, turnover of net worth of more than equal to 500 crores, turnover of more than equal to 1000 crore, or net profit of more than equal to 5 crores during the immediately preceding financial year has to formulate a CSR committee. CSR committee is not required if your expenditure does not exceed 50 lakh. So you have to prepare a CSR committee. Now, the CSR committee is responsible for preparing a CSR policy, that where should we spend, because it is mandatory. It is made mandatory by law that out of your net profits, at least 2% of your net profit, average net profit that you have made immediately preceding 3 financial years, the average 2% net profit must be spent towards society. We have Schedule 7, where there is a huge list of CSR activities, possible CSR activities which you may undertake. So it depends upon the CSR committee to formulate this policy and recommend to board, who is going to approve and thereafter undertake CSR activity. Who shall be the part of CSR committee? 3 or more directors, out of which at least one shall be independent director. Okay. So this CSR policy will be placed on the website also. How CSR activities can be implemented? Through any company, any NPO which is established by the company itself. Like we have seen in case of Reliance, right? Any company, any Section 8 company which is established by CG or which is established by some government or under any other act of parliament, or any other company, Section 8 company, if it has 3 years of track record of similar activities. There is another form which has been introduced, Form CSR 2. So it has to be filed. Earlier, we only had to give information about CSR in our board's report. Now we also have to file a report with ROC in CSR 2. If you do anything just for your employees, or if you do anything outside India, or if you contribute to some political party, or if you're doing the activity as you do in the normal course of business, then that will not be treated as CSR. Now we have another provision of set off for CSR. Sometimes it happens that we want to do something good which will take time. So we want to spend money in a project which will take for 2 years. So we have spent that amount, but only half of it is utilized. The remaining is unutilized because the project goes on for 2 years. So whatever is the unspent money that has to be transferred within 30 days to some scheduled bank, and then you can, or if you have spent it excess, then you can later on set it off. If it is not any ongoing project and you had to spend 1 crore, but you ended up spending only 70 lakhs, so the remaining 30 lakh you must transfer it to some fund which is specified in schedule 7, and it will be treated as your CSR expenditure. Okay, fine, ma'am. Okay, coming back to a section that we missed. Section 137 talks about filing of financial statements, filing of documents. Annual general meeting, if it is held, then in these cases you need XBRL reporting also, AOC4 XBRL. Otherwise, financial statements, CFS, other documents, all that annexure, all that set, plus accounts of subsidiary, they all would have been laid at AGM because AGM is held. So it would have been adopted. If it is adopted, file the set with ROC within 30 days of AGM. In case it is not adopted, then also file it. ROC will keep it as at provisional records, and at an adjourned AGM, when it is adopted, then you will refile it. Supposedly AGM is not held for whatsoever reason, then also you have to file the whole set and also state the reasons why AGM was not held. Of course, this does not apply to one-person company, because in one-person company you don't have to conduct any annual general meeting. Once your financial year ends, within 180 days, you file the financial statements. Okay. We also have a section of internal audit. Internal audit, section 138. So we have these prescribed companies. Every listed company, unlisted public company fulfilling any of these criteria, private company fulfilling any of these criteria, they are going to appoint an internal auditor who can be a chartered accountant, cost accountant, or any other professional. He can also be an employee, individual or partnership, and he is going to discharge the functions within scope as determined by audit committee, or if the audit committee is not there, then of course the board of directors. Okay. Chapter of audit and auditors. Chapter 10 of Companies Act and contains sections 139 to 148. Right. Okay. So what is audit? In this chapter, we talk about statutory audit, which is mandatory for every company. Right. So audit is mandatory for every company, every financial year. So if you have a company which is incorporated under this act or under any previous act, then it is mandatory for it to find an auditor who is eligible to get the accounts audited. Right? Okay, fine. Who can be the auditor? Only an individual if he's a CA in practice. If you go for the firm or LLP, where the majority of partners are CA, but only CA can sign the audit report, provided they are qualified under section 141. So section 141 subsection 3, we read a list of disqualifications, very important for examinations. If a person is not disqualified, then only he can become the auditor. And when he is doing the statutory audit of the company, he should not render certain services. So certain services are prohibited, which are given under section 144. How the auditor is appointed, of course, we find the auditor, we see whether he's eligible or not, we check whether he's disqualified or not, we check whether his appointment is as per term or not, we check whether he is doing the audit within the ceiling limit or not. So we take that certificate and all that from him, and also obtain his consent, and thereafter appoint the auditor in the manner which is prescribed in this given chapter. We inform the auditor that you have been appointed. We also file the notice of appointment with ROC. The auditor can be removed. He can also resign. He has certain duties and rights which he can exercise, and he has to discharge. Okay. Now, how the auditors are appointed, that is the first thing. We all know that it is the management which prepares the financial statements. They are approved and thereafter they are handed over to the auditors for audit, for obtaining a true and fair view on the financial statements which have been prepared, right? Section 139 is a huge section. It talks about the appointment procedure. It also talks about some rotation, and it also talks about if there is casual vacancy in the office of auditor, how that is going to be filled. And it makes a distinction between the normal types of companies and government company, because the auditor of government company is appointed by CAG, that is the Authority Comptroller and Auditor General of India, right? So by CAG. So that is why everywhere we will read this difference and distinction. Now, one more thing before I start. Although audit committee right now we don't discuss, it is discussed in section number 177. However, what is audit committee? Audit committee is nothing but a group of directors who are dedicated for this audit purpose, right? So they supervise the whole audit process going on in the company. So in case audit committee is not mandatory in all types of companies, if you exceed a certain threshold or if you're a listed company, then audit committee becomes mandatory. In case your company has audit committee, then all the decisions will route through audit committee. So first audit committee will recommend and thereafter board will do. But if there is no audit committee, then directly from board. So this is the distinction that you have to keep in mind. After you keep this in mind, we are good to go to start with the appointment of auditors. Okay. So first of all, let's talk about the non-government company, that is the usual case. When we are appointing the auditors for the first time, there can be two cases. Company has audit committee, there is no audit committee. If the company has audit committee recommends a suitable name to the board and the board appoints. Board appoints within 30 days of registration. If the board fails to appoint, then the members call EGM and they appoint within 90 days, who are going to hold office till the conclusion of first AGM. So whenever they are appointed from there till first AGM is concluded, the auditor holds the office. Thereafter, subsequent auditor will be appointed. But supposedly we don't have an audit committee. Now, in case we don't have audit committee, directly board comes into picture and board appoints. If board fails, members appoint. Simple. Right? Now, the first auditor retires or leaves the office at first annual general meeting. He can be reappointed. That means the same person can be reappointed for another term from first AGM to sixth AGM. But we can also appoint someone else as the auditor. Again, there are two cases. If there is audit committee, the board committee recommends name to board recommends to members. The first auditors are appointed by the board. However, the subsequent auditors are appointed by the members. Appointment of auditors is a matter of ordinary business and requires ordinary resolution. Okay, if there is no audit committee, then the board directly recommends the name to the members and members recommend to the, members appoint it. Okay. If you want to reappoint the same auditor, you must ensure that no resolution has come to you for his non-appointment. No special notice has been received for not appointing him and he's not disqualified. Okay. If at annual general meeting an auditor could not be appointed or reappointed, he will continue. He will be deemed like existing auditor shall continue. Now, when we come to government company, in government company, the first auditors are appointed by CAG within 60 days. If they fail to appoint board within next 30 days, if they fail to appoint members within 60 days at AGM. Subsequent auditors within 180 days from the close of financial year. by CAG, no other option. Okay. So this is undoubtedly something that you have to learn. You don't have a choice. Next is rotation of auditors. Rotation of auditors. What is rotation of auditors? And rotation of auditors means one auditor cannot continue for a long tenure. But obvious reasons are there, but this is not mandatory for the small type of companies. Listed and prescribed companies. What are prescribed? If you are unlisted public company with paid up capital more than equal to 10 crores, private company with paid up capital more than equal to 50 crores, or company which has a public borrowing or public deposits more than equal to 50 crores. Okay, so these are the companies which are prescribed, or if you are listed, then you must follow the provisions of rotation. That means you cannot continue with the same auditor for a longer tenure. If you are appointing an individual as the auditor, he can be appointed for maximum one term of 5 years. If firm, two terms of 5 years each. After completion, there has to be a cooling period again. And thereafter, cooling period of 5 years, thereafter they can be reappointed. And in that cooling period, you also have to keep something in mind, that if there is an audit firm which has a common partner, then that audit firm is also disqualified. Okay. Members internally can resolve that, okay, fine, we will rotate within the firm. That is something which is possible. But again, the condition of firm will remain the same. Right? How the rotation is going to happen? In the same manner. If the tenure of an individual auditor has expired, then audit committee will recommend a name. The name will be recommended to board. Board will propose the name to members. Members will appoint. Okay, fine. If the casual vacancy arises in a government company, it will be filled by CAG within 30 days. If it is not, then by board. If it is a non-government company, then it is important to know the reason of casual vacancy. If the auditor has resigned, there might be some conflict with the management, and therefore he must have resigned. So it is important that you take the approval of members. So casual vacancy will be filled by the board within 30 days, but they has to be approved by the members within 3 months. But if it was for some other reason, maybe the auditor died, if the auditor has died, then the vacancy can be filled by the board within the time period specified, right? So it will be filled by board within 30 days, of course. Okay, so I think that's clear. Okay. Now, here also you can write within 30 days, not to be confused. Disqualifications of auditors, section 141(3), very important. A body corporate cannot be the auditor. Only an individual or LLP can be the auditor. Moreover, officer or employee can be the internal auditor but cannot be the statutory auditor. The partner or employee or of officer or employee of the company, they cannot be. Then comes your next point. Any person who, his relative, his partner, holds security in company, holding, subsidiary, associate, or subsidiary of holding, not eligible to be appointed as the auditor. However, relatives are allowed to hold security up to 1 lakh. Supposedly, relatives are holding security 1 lakh and it exceeds 1 lakh, then you are given a time period of 60 days to take the corrective action. And thereafter, the disqualification will be attracted if the corrective action is not taken even within the tenure of 60 days. Next, if they are indebted in excess of 5 lakhs to company, subsidiary, holding, associate, subsidiary of holding. If you have given guarantee or security of some third person to company, associate, subsidiary, holding, subsidiary of holding. Okay. If you have a business relationship with any of this plus subsidiary of associate also, or if you if there is a person whose relative is a director or is in employment as a director or KMP. Fine. Or if you have been convicted by an offense involving fraud and 10 years have not elapsed, or if you render the service which is prohibited, or if you exceed the ceiling limit of 20 companies which is given for any given auditor. So if any of the above disqualification attracts, vacation also attracts. That means immediately you have to vacate the office of director, and it amounts to casual vacancy, which is going to be filled by the board or CAG as the case may be. Right? Okay. Now, removal of auditor before the term. Before annual general meeting, that is before annual general meeting, the board wants to remove the auditor. They can do it by passing BR, but they require CG's approval. So application within 30 days is made in the form ADT2 to central government, obtain their approval, and within 60 days thereafter pass special resolution at general meeting, and the auditor will be removed. He will be given an opportunity of being heard. If the auditor himself wants to resign, then they have to file ADT3 with company registrar and CAG if it was a government company within 30 days, indicating the reasons why you are resigning. There is also an option that NCLT can also remove an auditor in case of fraud. Okay. And you can also be removed at annual general meeting when a special notice is received specifically stating that we do not want to reappoint the retiring auditor. This special notice has to be received by eligible members. Who are eligible members? The ones who hold at least 1% of total voting power or 5 lakh paid up share capital. Now, they are the eligible members. Whenever AGM is going to take place, obviously you don't know that, so pre-hand you have to send, or if you have received the notice of AGM, you have to ensure that at least 14 days before AGM you send the special notice in which you are requesting to appoint some other person or expressly stating that this will not be reappointed. So whenever company receives such special notice, company sends a copy to the retiring auditor who is eligible to make representation to the members that we have. I have done so much for you all, and you are now removing me, or whatever they want to, right? And this representation will be circulated. If it cannot be circulated, it will be read out at the meeting. An auditor also has a right to make oral representation, but sometimes auditor tries to defame the company and tries to abuse this right. In such a case, any aggrieved person can apply to the tribunal, and tribunal, if satisfied, then the tribunal will say that, okay, fine, there is no need to make the representation. So the representation will neither be read out nor be circulated. Okay. As I told you, the tribunal also has the power to change the auditor. So if any person is concerned, they can make an application to tribunal. And if tribunal is satisfied that, okay, this auditor is doing some fraudulent manner, we also have NFRA now. NFRA constituted under section 132 of the Act, which is overseeing the quality of professionals. Right, apart from the body that we come from, that is our CA Institute, because only CAs are eligible to do statutory audit. So they also supervise us, and over and above, NFRA also supervises us. And if somebody makes a complaint, then NCLT also can remove us if we are involved in fraud. Okay. And then another auditor will be appointed. What do we do as an auditor? What is our duty? To make report, to make inquiries, to follow all the auditing standards, to exercise reasonable skill and care. And what is our right? Right to have all the books, right to receive notice, right to be informed, right to receive remuneration, right to make inquiries, and right to lien. I can retain the audit report if you don't pay my audit fees. So right of lien also. Then there are certain special types of audit of government company. CAG shall direct the manner, and the government company's audit will be done. CAG appoints the auditor, that we have read before also. Whoever auditor is appointed has to submit a copy of audit report to CAG. Okay, and within 60 days of the receipt of audit report, they can order supplementary audit or comment upon the audit report to supplement the audit report. That is something which is possible. Branch audit. See, if there is a branch also, the audit of branch can be done separately by some other auditor, which is very well possible. And that auditor will give his report, and the main auditor, the statutory auditor of the company, will compile it. Okay. So such branch auditor can report and give to company's auditor, or the company's auditor can also do that audit. Okay. Now, one important section over here is reporting of fraud. While doing the audit, if auditor comes to know that there has been a fraud in the company, it is the duty of the auditor to report the fraud. If the fraud is of lesser quantum, that is less than 1 crore, then you report it to board and audit committee, and they will disclose it in their board's report and take corrective actions. However, if the fraud is 1 crore or more, then you will immediately inform. Within 2 days, you will inform to board and audit committee and seek their reply. Once you receive their reply, then inform to central government also that this is the report, this is my finding of fraud, and this is the committee or the board's reply. If you don't receive their reply, then also you send the details to central government. So they are bound to reply within 45 days. But supposedly they do not reply, then also you send the details to central government. Section 144, if any person is the statutory auditor of the company, he cannot do internal audit, actuarial service, investment banking, other financial service, design the financial system, investment advisory, no, management service, no, accounting, bookkeeping, although a lot of CAs do that, but it's not permitted. If it is a company, if it's a proprietorship firm, there's no governing law as such. Others as may be prescribed. Now the last section, section 148, cost audit. Cost audit is not mandatory in all the cases. It is only mandatory for certain types of companies. Which types of companies? The companies maybe which are involved in manufacturing, so they have to maintain cost records. So the companies which are prescribed to maintain cost records also have to hire a cost accountant to do cost audit. They will prepare the report in CRA 3 within 180 days from close of financial year and give it to board, and board shall furnish it to central government with explanation. CG may ask for further information, right? Section 147, we have punishment if you contravene it. Section 146, section 145, all that is auditor's right plus duties, right? Okay.